Here's how you 70x your money. Do you want 7,000% returns? Or here's how you 29x your money. Do you want 3,000% returns? I mean, they sound great, right? Buy my equity and you can outperform Bitcoin. These are just some of the terms I've heard thrown around recently. Who's saying them? Why? And how can we actually get involved in this opportunity? Well, that's what I'm going to dig into in this episode. It's the latest hot take in the market, and it's Bitcoin Treasury companies. So I'm going to do a bit of a review. What have I learned? What did I do? Run you through an analysis framework that is new to equity investing due to the innovation that is Bitcoin, and take you through why I consider things always from the perspective of portfolio allocation, and paint a bit of a picture on the future and where this is all going. My name's Jake. Thank you for joining the podcast. I've been investing my own money for over 10 years. I love sharing what works. I also love sharing what doesn't work, and it helps people make the right decisions as well. So if you like this, give us a subscribe, get in touch, hi@𝐄𝐏𝐈𝐒𝐿.io if you have any questions at all. And I always encourage people, flick over to Nostr, chuck us a zap, get on Fountain to listen to your podcasts and get involved in the uncensorable social media platform or protocol that Nostr actually is. So, what are we doing here today? We are going to run through how I am currently looking at Bitcoin Treasury companies. Now, what are they? Like, what is a Bitcoin Treasury company? Like, what are you actually buying? So, a little historical recap here is, since I've been very closely involved in Bitcoin, and I've now almost owned Bitcoin. This December will be 10 years since I first bought some, but it's really from 2020, the last 5 years, that I went headfirst into this as a profession, in a sense. And when I rewind 5 years, like, there was no such thing as a Bitcoin Treasury company. And one of the reasons I got into Bitcoin was the announcement that Michael Saylor made when MicroStrategy decided to reallocate from US dollars as a Treasury reserve asset into Bitcoin. And if there was such a thing as a Saylorite, I would be someone like that. Someone who has been investing for a long time, is following people that they believe are making great decisions, and understand when, oh my gosh, that's a big deal. And so when a stock listed public company took Bitcoin on the balance sheet, that was a big deal. How many accountants are going to say you can't do that? How many lawyers are going to say you can't do it? How many shareholders are going to say you can't do it? And there it was, MicroStrategy. Boom. We've just bought $200 million, $300 million worth of Bitcoin. And here's why. Now, I'm not going to go fully into that story, but there were other versions of that prior, which was, for example, Daniel Pickering running a business called Listed Reserve, or Brian Estes. Both guys I had on my previous podcast, Bitcoin with Jake. You can go back and find those episodes. But they were like digital asset funds. In some ways, they were also front running what was the regulatory clarity required for the ETFs, which all launched in kind of January of 2024 and have been the most successful financial products that businesses like BlackRock have ever created. I mean, it's absolutely extraordinary what the ETF story is as well. Basically, there's a different way of getting exposure to Bitcoin that isn't Bitcoin in self-custody. Now, you could own equity in a Bitcoin treasury company, like what we'll discuss today, but you could also own an ETF, or you could own a part of a digital asset fund, like what I mentioned. Or, of course, you can have Bitcoin as a derivative on a exchange, which I don't recommend, or you can have it in a different type of self-custody of your own, whether that's a single sig or a multi-sig. There's a whole different array of processes for owning Bitcoin. But to specifically focus on Bitcoin treasury companies, like this year, there's been a proliferation of them, right? And what are they? So what's the performance been like? And, over 1 year, over 5 years, definitely buy yourself a TradingView account and subscription, because it's the only way that I've found to be a straightforward process for actually analyzing these things. And beware the timeline. Like, are you choosing the daily chart? Are you choosing the weekly? Are you measuring over 12 months, over 6 months, over 3 years? You'll get different answers every time. And what are you actually comparing against? Well, in some ways, these are equities and they're publicly listed. So the comparison that most equity investors will be using is some kind of benchmark to the general equity market performance, like the MSCI. Now, you could just say, okay, how's the FTSE 100 performed? How's the ASX performed? How's the S&P 500 performed? What are the index tracking funds you can buy and do some kind of passive investment play? Or you might be a sound money advocate, but you're still fixed on gold as the solution. So you're looking at gold as a return. Or what I do, which is Bitcoin as a hurdle rate. In my opinion, owning Bitcoin in self-custody is the new risk-free rate of return. Now, the extraordinary thing about it is it's not a US government bond creating you a percent as a fixed income product each year that, if you actually calculate it effectively against the money printing, is net negative real yield. The real inflation rate is faster than the return you get on a bond. The Bitcoin hurdle rate is 30, 40, 50, 60% CAGR, depending on what time frame you've taken. So you need to find other assets that are going to potentially beat that. It's quite difficult, as we'll find out. But first of all, as I think of this as a portfolio, it's like, okay, you've got a few different tranches that you want to think about your net assets in. And, number one, cash, right? So you are likely to be sitting in some form of fiat currency, Aussie dollar, pounds, whatever it might be. Then it's cash flow. So, okay, what businesses do you own, or what strategies do you have in place to generate income with your capital? Then you've got a capital growth bucket, like how are you actually growing the purchasing power of your net wealth? And finally, people have a bracket similar to like a precious metals they might have had before, like a gold or whatever. Now, the interesting thing with Bitcoin specifically is it hurdles cash, like 24 hours, 365 days, it's liquid, but also very volatile short term, so up and down. So it absolutely smashes the capital growth bucket as well. And what I've tended to do is I actually just buy Bitcoin, hold, ride it for the capital growth, and as I need cash flow, sell down and pay the CGT. So that's one way of doing things, but perhaps you could allocate to something that's specifically a cash flow generating tool. And ultimately, it's like, okay, how do I make my money? How do I manage my money? How do I multiply my money? Shout out to Laura Tynan that came on the show that has that really nice framework. And so what is a Bitcoin Treasury company? Now, for me, they currently sit in a bracket, which is, okay, let's think about this for a second. It's capital growth, but within that subset, it's actually speculation. Like, to me, these are highly speculative bets. And I'm willing to make them with like a very, very small percentage of my net wealth, because if it does do a 10, 20, 30x, happy days. If it disappears, well, what's the downside? It's a small percentage of your allocation. Meantime, I like a large allocation to Bitcoin, which with a CAGR of 40%, 50%, it's just crunching away for you in the background from a wealth growth tool. It's unbelievable. What did I actually do about this? Well, I took a position in a company called Matador, so the stock ticker MATA, and I got in at the pre-IPO price, which was 50 cents Canadian. And what's happened over the last 9 months has been very, very interesting. At one stage, I was going, oh God, I'm really pleased with that Bitcoin Treasury company I bought. I'm 3-4x my money. But the mindset I had on entry was like, this is speculative, kind of like an early stage angel investment in a way, but it's always liquid. So I saw it as less risky, which was great. But it was like, this is a 5 to 10 year hold for me. Like it's like, maybe this goes to the moon, maybe it doesn't. And that's okay. But what you'll find out through this episode is my thinking's really evolving as to what these companies actually represent. And today, you can now buy MATA at less than what I paid in December. Now, the question is that a good price? And price and value are very different things. Like the concept of investing in lines, not dots, is something I like to talk about. So the initial data point, the initial entry point was, okay, what was the team doing in December? What was the stock price in December? What progress has been made since? It's like, okay, well, there's been a product that they've released. I don't really love the idea of like getting gold on the blockchain. Like, just use Bitcoin for what it actually is. And they've accumulated some Bitcoin. So, okay, that's interesting. I really liked the founding team because of their banking background and their capital markets background. I didn't love it so much because of the kind of crypto lens. So am I happy with the performance? Well, not really, because Matador 21% down from the price I paid. Shit. Okay, well, that's not quite the headline you might have heard a couple of months ago about how amazing these treasury companies are. what does that really mean? It's like, okay, well, for me, I'm going to hold it and see what happens. Should I be buying more? Because that's a decision I could make. Like if I thought 50 cents a share was good value and it's now 21% below that, then why am I not adding to the position? And thus far, my thought process is simple. It's like you made a small allocation as a speculative bet, something long term. So just let it run, let it do its thing. But maybe I'm missing a trick. Maybe I should have exited at the 3 or 4x. Maybe I should be paying closer attention to this and monitoring it much more, and using my time and building some kind of system. And so maybe in the future, I should implement some kind of sell side strategy where it's like, okay, if you buy Bitcoin Treasury Co. and it does a certain multiple, just get out. Like it's a speculative position, 3, 4x. If you've beaten the Bitcoin hurdle rate, be happy with that, pay your CGT and get out of the position. And that's where these Bitcoin Treasury companies are interesting, because to me, that's pure speculation. It's like trading an altcoin. I don't want to own Solana for 10 years. Like, forget it. And I actually don't play any altcoin trading games at all. But I do have some friends that play in that space, and some have done very well. I would argue that it's going to be much harder to do that going forwards, but who knows? I mentioned the 21% down. That's hopeless. And Bitcoin from 20 December last year through to spot market today, 12% up. Wow. Well, that business has really got a lot of work to do now to get back up and over that Bitcoin hurdle rate. And for that reason, like this is that classic concept, like action leads to clarity. Take some risk, get some skin in the game, and make a bet and see what happens. And you learn so much as you go along, right? Now, in terms of like past performance, I think it's also really important to just point out that obviously Bitcoin is the hurdle rate, but why is this happening with Bitcoin Treasury companies? And in some ways, like right now, August and September is a very quiet period. And that's because markets are driven by people. And guess what? August is the height of the holiday season. So the leading investment decision makers across the Northern Hemisphere are on holiday, enjoying time with their kids and not trying to take a break, right? These guys are, and you know, guys and girls, they are absolutely active investors and they're following the markets really closely all the time, but you have to take a rest. And so what a surprise, there's a bit of a lull in the market. Everyone gets back in September. Okay, what's been going on? Not sure. What are our targets for the end of the year? What do we actually need to get achieved? All right, we've got 2 or 3 month window here to make it all happen before Christmas, or even in the US, Thanksgiving, which comes a bit before. So basically, there's some market fatigue going on right now. We're like, ooh, Bitcoin treasuries haven't done quite what we expected. In fact, I should have just held Bitcoin in some cases, like me with Matador. And it's just boring, right? It's just crunching away. Like when's the blow off top? You know, I've already extended my all-time high prediction to something like end October, having originally thought August. So what's happening here? And just the market and this cycle just feels different to before. What a surprise. Things are changing. So the question then becomes, what happens with Bitcoin treasury companies between now and going forwards? Now, I'll get to that in a bit, but let's just continue this idea of like what has happened thus far. MicroStrategy, in the last 5 years since they announced their Bitcoin treasury strategy, they've gone from $31 a share to $330 a share. That's a 10x in 5 years. Well, that's absolutely excellent. Why wouldn't you want to own some of that equity? Like, that's a brilliant result. Now, of course, always peg that back to what Bitcoin has done in the same time frame. But you've also got Metaplanet, a business that took on a strategy very similar in April of 2024 through to the spot price of today. Their Japanese yen price of $27 is 27 Japanese yen has flown to 596 yen as of today. That's a 2,000% increase, 21x your money. Wow. Now, of course, be very careful of the timelines that these prices are quoted against, because when I started this podcast, I mentioned a 7,000% return. Well, that was actually in relation to Metaplanet that at one point was 70x your money, had you got in at the right time and exited at the right time. But would you have known that that was the right time to get in or the right time to get out? Did you have the lens and the analytical skills to know where you were actually at? Well, perhaps not, right? And that's where this gets really interesting. So what are we dealing with here? Well, we're dealing with an investment scenario that hasn't really existed before. So what the hell is going on out there? And the typical lens that a value investor would take to these equities, they don't work. They do not see value when there might be. And so how do we find that? Huge shout out to Mark Moss. If you're a follower of his content and newsletter, you know that he's part of the Bitcoin Opportunity Fund and is also raising a fund in the Bitcoin Treasury space. And he had an excellent PDF that I got my hands on at one point that I was able to run through that helped to identify how professional investors are starting to analyze these companies. Like, why has MicroStrategy performed like that? Why has Metaplanet performed like that? And why have other companies like a Semler Scientific not performed like that? And my feel here is what I want to understand is like, who are the grifters out there? They're like, ooh, my equity is just not doing very well. I tell you what, should we jump on this Bitcoin bandwagon and see if we can make a bit of extra money and then, tin the whole thing? How am I going to not get into some kind of pump and dump scenario like an altcoin? How do I actually look at this in a serious manner versus what the rest of the market might be doing? And the sell is so obvious, right? In terms of, you want to outpace Bitcoin? Yeah, maybe you're a bit scared of owning Bitcoin in self-custody. Why don't you buy my equity and I'll do it for you? And I can see a lot of people getting tripped up by that, especially with the issue with the unit bias of Bitcoin. They're like, oh shit, Bitcoin's at $115,000 a Bitcoin. I can't afford that. Maybe I'll just buy some of these companies. And that happens all the time, right? And my main fear is like, what happens in a bear market? Like, it's all very well launching a Bitcoin treasury company in the middle of a bull market where everyone's super excited about where the price is going of the underlying asset Bitcoin, and they think they can trade at a multiple that is attractive. It's like, okay, cool, good for you. What happens when the momentum shifts? And that's my main fear with these things. But the point is what we got to figure out is, what is the market's confidence in the equity's ability to accumulate Bitcoin? And so there's a 7-metric framework that Mark has identified, and I'm just going to run you through them all, because they basically, when combined, you can create a scoring system, and that scoring system helps you identify whether or not this is an equity that you should look more closely at, monitor it, buy it, or like, this is an excellent buy, get involved now. The first is the mNAV, so the multiple of net asset value. This measures the confidence of the market in the Bitcoin strategy execution. So, for example, I already mentioned the idea of Semler Scientific. Well, they've got Bitcoin on the treasury, in their treasury. That's great, but they're still actually considered a medical business by the market. So is this a pure Bitcoin treasury play, or is it some other morph of that? And a sustainable premium, so you want to be following this mNAV over time, indicates that the market believes the company will generate more Bitcoin value per share than holding Bitcoin directly. Now, that's a really important thing. You've got to think about how many Bitcoin per share the company has. So when you're buying these equities, what percentage of the business do you own? How many shares are outstanding? And how many Bitcoin are on the balance sheet? And are they actively increasing the amount of Bitcoin you're exposed to or decreasing? You've got to be really careful about this. Unsupported premiums often collapse when execution fails to meet expectations. So if you can see a sustained mNAV in an equity that claims to be a Bitcoin treasury company, that's really interesting starting place. So, okay, well, these guys they've managed to sustain a multiple over the net asset value for this period of time. Cool. Then it's the Bitcoin holdings transparency, the BHT. This evaluates the disclosure quality and strategic commitment. So it's like, okay, what is the quality, what's the frequency, and what's the accessibility of a company's Bitcoin-related disclosures? Like, are they actually telling everyone how much Bitcoin they have? And how often are they doing it? And so it basically evaluates the effectiveness with which companies communicate their Bitcoin strategy and updates on holdings to shareholders. So, okay, because I could just own Bitcoin in self-custody. I know exactly how much of the network I own. I know exactly where it's stored, and I know no one can take it from me or debase it on the back end. So if I'm buying an equity, I want to know exactly what they're doing with the Bitcoin that they have on the balance sheet, because to me, that's the main driver of the equity price over time. Next is the MTR, the management track record. So obviously the management drives every aspect of a Bitcoin treasury. So the strategic vision, the execution capability, the stakeholder management, capital allocation discipline. If they're poor business operations, then of course the equity value is not going to go up over time versus the hurdle rate that is Bitcoin. You're looking for exceptional leadership. And again, that's why so much of investing and decision making comes back to the team, the talent. Who are you investing in? And is it someone that you've seen creating Bitcoin content for 5 years plus, that you know is like ultimately a hardcore Bitcoin maxi, can see an opportunity that others don't because they're simply already heading where the puck is? They're already seeing round corners because their information is just better than others. Well, that is a good bet. Next up is the BTC-CR, which is the Bitcoin credit rating. So debt structure determines Bitcoin Treasury sustainability during market downturns. AKA, are they over-leveraged? Poor credit profiles force liquidation at disadvantageous prices, creating strategic constraints, generating refinancing risk, and limits operational flexibility. The opposite applies, obviously, with a strong credit profile enables companies to maintain strategies throughout volatility. Now, I saw a stat at one point that MicroStrategy's net cost of debt is under 1%. Holy shit. That is an unbelievable statistic. It's like, hang on, so you can borrow at 1% and you can accumulate an asset that's growing at 40% a year. That is a great play. And it's one of the reasons why public market equities are so interesting in this instance, because you can use financial engineering. And someone like a Semler is an absolute wizard financial engineer that spent 30 years as a founding CEO of a business, running a company as a publicly listed business. Like, what a guy to be able to invest alongside. And I, as a retail investor, like, what's the best cost of debt I can get? Well, very recently, I've been doing a real estate transaction and my interest rates are like 9%. Now, perhaps if I fit their loan profiles a bit better, I might get a 7 or an 8%. But still, you get the point. It's not under 1%. It's part of the problem, in a sense. It's close to the money printer, right? The Cantillon effect, absolutely in play here. But that doesn't mean that you cannot exploit the system if you see opportunities. Next up, the BTC-YP. So this is the Bitcoin yield performance. So Bitcoin yield distinguishes genuine value creation from simple Bitcoin accumulation. So companies can purchase large amounts of Bitcoin, but they destroy shareholder value at the same time if they issue shares at prices below the Bitcoin net asset value, or they just deploy the capital inefficiently. So a positive Bitcoin yield means shareholders gain Bitcoin exposure without suffering dilution. Really important, right? Are you being diluted or not? Next up is Bitcoin torque, which is basically capital efficiency. So, and I think this is a key driver of like whether or not you're betting on a good team. But superior operators from companies that simply spend money on Bitcoin without creating shareholder value. I'll say that again. Capital efficiency separates superior operators from companies that simply spend money on Bitcoin without creating shareholder value. So high Bitcoin torque indicates strategic leverage, effective market timing, execution excellence, and sustainable growth capability without diluting existing shareholders. Now, finally, it's the R2. It's the model fit correlation. High model fit correlation indicates market recognition of Bitcoin strategy, price predictability based on Bitcoin performance, strategic validation, and pure Bitcoin exposure for investors. Low correlation suggests the market still values companies primarily on legacy business performance. Now, I touched already on the idea of Semler Scientific still being a medical company in the eyes of the market. That's what this identifies, right? Is this an out-and-out Bitcoin Treasury code play? Yes or no? And the higher the correlation, the better the answer. And at the end of all of this, you get a score. So, and I'm not going to go into any more detail with these metrics right now, but this is a quite sophisticated piece of equity analytics that requires someone to spend, 10 to 100 hours going through the different Bitcoin companies that exist and figuring out this model and then figuring out which company fits well to the model. I am going to try and figure this out myself because I like the learning process. I'll touch on this in the conclusion. So, one thing I've tried to highlight here is there's basically the different types of Bitcoin corporate exposure. And think of it in kind of tiers, essentially. So at the very bottom, it's like companies that put Bitcoin on the balance sheet. Now, this is what MicroStrategy did initially, right? They literally just bought Bitcoin instead of owning US dollars. And then you saw the likes of Tesla come out and buy some. There's Bitcoin mining companies that are accumulating Bitcoin all the time. But this is the kind of the lowest level. And MicroStrategy absolutely not that any longer, right? They have moved up in a sense. The layer above that is then a Bitcoin treasury with a legacy business. So MicroStrategy is that now, right? They have a very small operational company, but mainly a balance sheet play. Metaplanet as well, right? They have hotel, I think, underneath all of their now Bitcoin play. And then the top level is literally the Bitcoin ETF, right? You basically need to understand what tier of corporate exposure the Bitcoin is at. And so it's Bitcoin on the balance sheet, number one. Number two, above that, Bitcoin Treasury with a legacy business. And then number three is a Bitcoin Treasury strategy. And these businesses, as they evolve in their strategies, are moving up and down in between them. And that's something you just need to be really careful of, right? Now, of course, as part of this episode, I've done plenty of my own study, and I love, obviously, there's a handful of podcasts that I regularly tune into. But so I listened to Preston Pysh a couple times. Shout out to Preston. I was very grateful to meet him briefly. I'd love to meet him again and be on a panel with him at 𝐋𝐄𝐄 in Sydney almost this time last year, actually. But he described what MicroStrategy is building is a transmission. And for engineers out there, they'll get this. But I'm not an engineer. And he then referenced it to a bicycle. And I was like, oh, that makes more sense. And when you have a bicycle that's got, let's say, 5 gears, and you've got a bunch of cogs around the pedals, and you've got some cogs on the back wheel, you have an ability to increase the power that you put into the bike and then increase the output, or decrease the output and decrease the input. And what he's describing MicroStrategy as, with the blend of ordinary shares, preference shares, and debt, is a company that is able to supply a transmission to wealth in the public markets. And so as the market heats up, they can shift things around, and as the market cools off, they can shift things around again. And that's an extraordinarily simplified version of what Saylor's actually doing. Again, like, what a guy, right? Are you going to bet against Michael Saylor? 30 years of managing his own founder-led business. Like, to be able to sit alongside a master financial engineer like that as a retail investor is an incredible opportunity. And that would be the one business I'm looking at probably the most closely. But what Preston highlights, and what I hadn't previously understood, is maybe the Bitcoin treasury companies aren't actually an out-and-out speculative play for capital growth over and above Bitcoin. Maybe they're a cash flow play. And he highlights, it's like, it's all about the bond market. I'm like, what's this guy talking about? And essentially, the boomers, they want to retire. And let's say they've got a net wealth of $1 million. Well, you give that to the US government on a 5-year or a 10-year or a 30-year yield, you're making a couple of percent. So what? So your $1 million is going to give you 10 grand a year, 20 grand a year. That's going nowhere. Whereas MicroStrategy is pumping out 7-8%. So that becomes a lot more interesting from an income play, because the dividends are so attractive. And there's different forms of MicroStrategy, right? Spend a bit of time figuring out, okay, do you want preference shares, or do you want to own debt, or do you want to own the equity itself? The ordinary shares, or common shares, they might be called. So that there's more complexity here. This episode is not about diving into MicroStrategy as an out-and-out discussion. Maybe I can save that for later. If you're interested, let me know and I can run through it. But the point here is to rejig my thinking. It's like, maybe this isn't a moonshot play. Maybe this is a cash flow play. And then, going back to Mark's report, what they highlight is the addressable market for bonds, $300 trillion, right? And it's like, okay, the fixed income markets are absolutely ripe for disruption, because we know that owning these products is not beating real inflation. Now, they're good from a liquidity perspective, and they're good from a downside risk perspective, in that most people believe that the capital risk is very low, right? They don't expect the US government to not pay them back the money. Now, they won't not pay them back because they can print their money. But the question is, what are those things actually worth in real purchasing power terms in 20 years' time, in 30 years' time? Well, my bet is that they are pummeled, absolutely pummeled. So actually, why not own a company that pays an excellent dividend, because their balance sheet is unbelievably strong? And you're not buying an operation. So it's not a mining company that's got to get shit out of the ground, ship it to a port, send it overseas, sell it. It's literally holding Bitcoin and then using financial engineering, which is available to public companies and public offices, such as convertible loans, such as ordinary shares and preference shares. And it's like, wow, this is actually a very different play. And Mark's report suggests that if you look at the size of the Bitcoin treasury market today, and you look at the total size of the fixed income market, you've got a 6,000x potential in market size. So, whew, okay, well, this captures my attention because you're like, are you batting in a market that's small compared to what it's disrupting? And the answer is absolutely emphatically yes. And if that's the case, then you can jump on board something with an excellent tailwind because the market's massive and that gives people the opportunity to get it wrong a bunch of times. But still, it's like actually what you're competing against here isn't necessarily other Bitcoin treasury companies, it's fixed income products. And what are they paying? So, okay, well, there's a value of the loan itself, of course, underneath it all. But then what's the yield? And those yields, well, they're crap compared to the dividend that something like a MicroStrategy is actually able to play. Yeah, whoa, okay. So for me, this is a big learning. Maybe I've been thinking about this all wrong. Now, I'm still very concerned about how do these things perform on the way up versus the way down. And that remains to be seen, right? Maybe we hit an all-time high towards the end of this year, and then we're going to crunch back down, I'm pretty sure, for kind of 12 to 18 months or so until the next rally. My entry point is likely to be at the bottom of the next bear. I think that makes the most sense. Like, watch and wait and see what happens. Like, how do these equities actually perform? Who is, to again discuss investing in lines, not dots, who's really making progress? Who's truly figured out what these things actually are? And of course, with that 7-metric framework, you already have an excellent position on what's going on because it will filter out a lot of companies. Like I've got a list on my trading view of companies that have announced their Bitcoin treasury strategy. You can go to the website bitcointreasuries.net, I think it is. There's lots of businesses out there that have Bitcoin on the balance sheet now, but which ones are Bitcoin companies and which ones are like, oh, buy my equity because I've got a little bit of Bitcoin? What's happening is maybe I'm going to have to shift from this speculation lens to actually cash flow. And the boomers out there that are thinking about how to allocate their retirement, well, they're definitely looking for cash flow. And so maybe these Bitcoin treasury companies are teeing themselves up to hammer into that market. And I think that could well be a good bet. So a final thing I want to talk through before I wrap this up. There's been a situation that popped up recently here in Australia. There was a business called Locate that announced a Bitcoin treasury strategy, and they were an ASX listed, it was a logistics technology company. Now, what's happened is the ASX has certain guidelines for the type of business that can register on their index. And one of the subsections of it is it requires the business to not have a 50% or more cash or cash-like balance sheet. And it considers Bitcoin to be cash-like. Now, the irony of this is the ASX considers Bitcoin as cash-like, but the ATO, the tax office in Australia, still considers it a capital asset for capital gains. So that's a clear contradiction. And ASIC, the securities regulator, has another opinion. So it's a mess in a way. But the reason that we're not seeing a proliferation of these kind of companies on the ASX is because of this ruling. Now, are they going to change it? I hear they might reconsider it. But the company Locate, I heard, is actually going to go to the NZX, where that doesn't exist. And so what this highlights is there are local geographic-driven market nuances that drive the arbitrage opportunity on stock prices. So why did Metaplanet rocket the way it did? Well, it unlocked a load of capital in the Japanese market that didn't have access to Bitcoin. So what we as investors that have an ability to bet on these globally listed public markets is find those opportunities. And that I think could be really good fun. And you're like, oh, right, okay. So the ASX right now, for me, there's no point, right? But the day that they update that term to say, okay, 50% cash is no longer a requirement of ours, or 50% cash-like because of Bitcoin's requirement, or they might make a subsection specific to Bitcoin. I don't know. Shout out to the guys at the Australian Bitcoin industry body that highlighted this issue for me recently and the work they're doing. So do go and check that out. But you're like, okay, so where else might this happen? You've got to be super careful about the timeline, right? You hear 7,000% return, 3,000% return, but they're over specific timelines, and those prices, they've come off. They've really come off. So those opportunities aren't quite as sexy as people might have made them sound. But I think you can say, like, safely, that past performance has been extremely interesting. And so has your mindset shifted? Well, yeah, mine's shifting, as you can hear. The next step is, where's it going? So what's going to happen between 2025 and 2030? And that's really what I think I want to bet on going forwards. It's like maybe back into 2026, 2027, there's going to be some interesting equity positions to take where you know that they've taken really, really fascinating Bitcoin Treasury strategy positions and are a good bet over the kind of medium term. More recently, we're obviously hearing that the interest rate environment is shifting and central banks are starting to loosen. So big meeting in the Federal Reserve this week. I record on a Thursday morning. This will be out probably Monday next week, so after the weekend. And it will not surprise me in the slightest if there's been a rate reduction. I think I saw a 90% probability of that happening. And with that, is that going to be immediately priced in, or are we going to see asset prices start to pump? My recent experience with the real estate market here in Australia, lots of the sales agents are talking about interest rate reductions in Australia. Again, the cheaper the cost of capital, it's got to find somewhere to go. Often it's into asset prices. So over the next, where are we now? Mid-September, October, November, December, people back from work, interest rates coming off. Whew, it's going to be a very, very, very exciting couple of months to see what actually happens. And so let me summarize, like, where am I actually at as an investor in Bitcoin Treasury companies? Well, number one, I need more time to learn. Like, absolutely. Even just creating the content for this podcast episode, I've learned some things. And it's like, that's just, okay, I hadn't thought about that. You know what I mean? Number two, I just want to watch, like, witness what actually happens. See who are the winners, who are the losers, who are the team that strike me as actually, like, having a high level integrity, genuinely understand Bitcoin, and have a maximalism philosophy. Like, I think about the speech that RFK Jr. did, which included so much about Bitcoin mining and the ability for Bitcoin as a sound money to improve the world, versus Mr. Trump at the conferences pre-election. And the Mr. Trump has released a number of his own coins and stable coins, and it was just so obvious, right, that there was a guy that had really gone out and looked at the base layer problem of money, and Bitcoin was an unbelievable solution to that, versus someone who was throwing out buzzwords and basically was just absolutely buying votes. And you're like, okay, interesting. So the same will happen with CEOs of Bitcoin Treasury companies, right? Some of them will be guys that come out and they just like, yep, well, look, it turns out I'd actually been reading Ludwig von Mises for the last 20 years, and I've been a sound money advocate, but I just never looked into Bitcoin. I was also the CEO of this stock listed company, and it's actually so clear to me that this is the best way to protect the purchasing power of the company for the shareholders. It is a responsibility of mine as the official leader of this business to protect the capital of the shareholders. I'm buying Bitcoin. Versus, shit, guys, our business is really not doing great. Should we just like throw out the word Bitcoin and see if we can pump our retail price a bit more, and let's maybe try and fold the company? You just don't know, right? So number one, need more time to learn. Number two, keen to witness performance. Number three, aware that the opportunity might be closing. So yes, I'm looking at point number four, the bottom of the next bear, check out the chances, but like, maybe this opportunity is closing. I don't yet know. There are people out there that would like to say that it is, hence buy my equity or invest in my fund. But I don't know. Like, Bitcoin's so early, right? Look at net assets globally. Bitcoin 2 trillion. Okay, well, we've got a long way to go, right? So for me, this still is a speculative thing. Like, nothing beats Bitcoin in self-custody. Go and figure that out first. Once you figured that out, okay, maybe it's appropriate to take a bit more of a speculative position with some of your wealth. So point number five, yeah, for me, it remains a speculative bet. And point number six, finally, is nothing beats Bitcoin in self-custody. Now, I want to caveat these conclusions with a couple of things, which is, I think I might be wrong about Bitcoin Treasury companies representing a speculative play. And actually, I should look at them more as a cash flow play. And therefore, instead of comparing the equity position to Bitcoin, the hurdle rate, perhaps I should be comparing it to the S&P 500 index returns, or the real rate of inflation in terms of monetary debasement, and the ability to return a dividend, aka a yield. So it's kind of like, instead of owning Bitcoin itself, you own an equity in a company that understands how to use financial engineering, which therefore pays you rent. So it's kind of like, the traditional real estate play in terms of like the model and the capital growth and the yield. So that's definitely one I need to spend some more time thinking about. Caveat that number two with, well, if the yield on an equity is 10% and you owned $1 million of it, and therefore you've got $100,000 a year, just to play on that example I gave earlier, that sounds nice from an income perspective. But if that equity only goes up by the same as the S&P index over 12 months, so 12%, so it's suddenly 1.12, and you make another $100,000 the next year. So, okay, so you've made yourself a net gain of, let's call it 1.3, 1.4, but Bitcoin might have doubled. And so you could be sitting on 2, and you then sell down the 200,000 and you still have 1.8 million bucks worth of capital. So it needs to be played with, right? And some more thinking. One other thing this is thrown up is I love spending time with my kids. I'm a homeschooling dad. My time during the day is best spent focused on playing with them. And for me to go and spend hundreds of hours analyzing Bitcoin Treasury company opportunities, yes, it would be a fantastic way of learning, but maybe it's just not what I want to do with my time right now. And another opportunity is to invest in a fund. And that is what Mark's building, the Quantum Wave Fund. So do go and check that out as well. It might be just a simpler process. Okay, just allocate a percentage of your portfolio that you feel comfortable with to make a speculative bet / a cash flow play, and let someone else get on with the hard work of figuring out how to actually do that. So I'm trading off this idea of like, do I want to learn more myself, or do I let someone else get on and do it for me? And what's my time worth, and what's important to me? And that, of course, is a lens that everyone should take. I saw something recently that was very interesting when I was researching the power law in relation to Bitcoin. And someone described, if your understanding of Bitcoin is good, then you're 1% of the population currently. If you understand that the power law is the pricing trajectory of Bitcoin, then you're 1% of the 1%. So your 0.1% of the population has understood that Bitcoin is important and that Bitcoin is following the power law. Now, the power law could be broken, of course, but that was an interesting lens. I'm like, if you're understanding Bitcoin, you're 1% of the population. If you understand Bitcoin treasury companies as an opportunity with this level of sophistication, i.e., I've got to run every Bitcoin company that's claiming to be a treasury company play through those metrics, I would argue you're also 1% of the 1%. So probably 0.1% of the global population is currently looking in this much detail at what a Bitcoin treasury company might be. That's mad, right? What do I know? Well, Bitcoin's inevitable. Everything I've studied about it, it's just going to do its thing. The question is, what part do I want to play in that? And which area do I want to focus my time and attention? And if it's doing a 30, 40, 50% CAGR on its own, maybe you just kick back and go and enjoy being a dad. And it's funny because I find that so hard to go and do. There's something that's so deeply conditioned within me to be always hunting for these opportunities, working, quote unquote. But I guess that's just me. So let's see where it all goes. I'd love to hear from you. If you found this valuable, reach out, hi@j.woodhouse.io, drop me a message. And equally, jump onto Fountain, send us some zaps, boost, and I'd love to hear from you. So with that, awesome. Enjoy your day. And that is my latest take on what Bitcoin Treasury Company is.